Let's turn to the private equity business model. The large buyout firms are transforming themselves into broadly diversified asset managers. What's driving that, and how is that transforming the industry?
I think different firms are doing it for different reasons. For us, we started back in '95 expanding into different asset classes because we wanted to do things that were synergistic. So when we entered debt markets, when we entered public equity, when we started to expand globally, it's everywhere we thought we could have synergies. I think basically for other people, it's a combination of that. I think it's a combination of the fact that people see the opportunity to use a very strong brand, and people, some of the guys who are public companies, I think, see the opportunity to create more growth.
And in terms of the industry landscape, many people predict that one fallout from the financial crisis will be a shakeout in the ranks of private equity firms and also a rollback in the amount of capital committed to the private equity category. Do you agree, and what impact is that going to have?
We definitely think that that it would make sense for there to be less private equity firms out there. By latest count, there was maybe 1,700. So I don't think it will have a big effect on deals or the ability to make money because we could have 1,000 firms, which would be a pretty big shakeup, and it would still be very competitive.
But will the industry actually lose capital commitments rolled back by institutions that simply can't invest or don't wish to invest as much in the category?
I think the total amount of capital will probably go down, but one of the things, especially in the U.S., this has been true for like the last 10 years, is that there's always been a huge amount of, quote, dry powder. So there's always been enough dry powder for people to do 6 or 8 years worth of deals. And of course, in any 1 year, and that's never going to happen. So we think there's a fair chance that the investment rate might not change as much as the size of the funds. Meaning, if people had a fund that lasted 6 years, they raised a smaller fund, but they invested over 4 years, it doesn't mean the investment rate will change by as much as the committed capital changes.
For more of the Deal's video interviews from the Yale School of Management Private Equity Conference, visit thedeal.com/pipeline.